Good morning, everybody.
Well,
I beat you to it.
yeah, bit eager. Do you want to take over? Do you want to do the show this morning?
No, thanks. How are you doing, guys?
Morning, mate. Morning, Kay. Morning, all traders.
Good morning, good morning, good morning.
How's it going?
Not bad. It's raining cats and dogs here.
Good. About time. sick of seeing your message about being on a beach and being on boats and whatever, and 18 degrees. So yeah, no sympathy here, mate. guess what it's doing now?
What?
Raining.
Oh, nice.
For a change.
Yeah, we get earthquakes as well. Last couple of days, it's been constant. So
that's probably Steve dropping his wallet.
Oh my God! Yeah.
Oh, it never ends. It never ends. You're right, Kay? How's your wallet, mate?
My wallet?
Yeah. Any earthquakes coming?
Yeah, on the 16th of Dec, but that's an insider one.
Yeah. That's our Christmas, our little Christmas meetup. If anyone's in the South Coast want to join up with us, let us know. We'll tell you where we'll be. 16th December. All the central banks will be done, and from that point on, it's Christmas. But anyway, long way to go until then. And let's get stuck into it. I think we're going to start with the data this morning because there's been an absolute ton of it. All from yesterday, all through today. So let's have a quick rundown over some of the main items. I'll just be a bit selective here. We already discussed the consumer inflations in the Eurozone, so it's gone to later stuff. So German CPI came in as expected, a dip on the month for both the Eurozone measure and the German CPI. We saw that from the regional numbers earlier during yesterday. Canada GDP surprised to the upside. Annualized quarter on quarter for Q3, 2.9% versus 1.5 expected. Bit lower than 3.2 prior, but still a decent beat. On the month, coming in expectations at 0.1%. There was a bit of a strange reaction in CAD pairs as that data dropped, which we'll touch upon in a moment when we look at some of the prices. HPI data in the US, now we're starting to see a real trend lower. Year-on-year number there, 11% versus 12% prior from the F.A.C.E. The 20-city S&P Case-Shiller, 10.4 versus 13.1 prior. These are still gains, it should be said, but not coming in as hot as previously. It had been on a one-way ticket higher. US consumer confidence came in at 100.2 versus 100 expected, so marginal beat there, but the other metric and expectations were a touch lower on that. Over to Japan, industrial production a bit softer. Again, a bit of a mix of data coming out. Some stuff in Japan is looking pretty good. We can see by the production forecasts looking fairly good going forward, but the actual number coming in worse than expected there. So a bit of a mismatch that we see sometimes between services and manufacturing in there. Coming through to Australia, CPI in Australia pulling back as well year on year for October, 6.9% versus 7.4% expected and 7.3% prior. So it was expected to rise. Now, Australia has only recently moved to monthly inflation numbers. So maybe they're getting used to printing the data there, but it was softer anyway. Bit of a theme we're seeing developing in a lot of economies now with inflation perhaps having peaked, that magic word. China not looking good, as you can see there. Their PMIs, I think these are the actual Chinese-led ones, so rather than the third-party ones like the S&P Global, that sort of thing. These are the official China numbers. So manufacturing further into contraction there, 48. Services as well, further into contraction. Obviously, that plays into global recession fears, whatnot, and wherefore. But we've seen similar themes in a lot of the other countries, US, Europe, UK, all around. The PMIs are not looking good, and that's going to fall into the global recession fears. One thing you need to keep an eye on: oil and commodities and things like that. Over to Japan, construction orders there, not as high as it was last month, but still a positive, but a big drop from what we saw before. Housing starts numbers there as well, looking a bit soft. Then we come across to Europe. French inflation, CPI holding at 6.2%. HICP also holding at 7.1%. Numbers of GDP there as well, coming in roundabout in line with expectations. Spain retail sales year on year up 1%. German unemployment, a change, up 17k, a bit worse than expected. Unemployment rate just ticking up a point there too. Some of these final GDP numbers coming in, don't really care about. Italy coming in pretty much on the numbers. The Swiss zoo coming in much worse than expected. Things not improving over there. Italy CPI expected to fall back in the CPI. It didn't. It matched last month. Same pretty much as HICP was expecting to drop. It only dropped a pip instead of down to 12%. Let's have a look at Greek retail sales while Stel's here.
My wife's been out shopping, so I'm guessing it's positive.
She's been doing the Christmas shopping, has she? Well, that was what, in September? She was doing Christmas shopping in September. Oh, that's probably before the inflation kicked in. So yeah, good job, Mrs. Stel. Now, Eurozone inflation, we saw a decent move lower in headline inflation, down to 10% from 10.6 prior, coming off worse than the 10.4 expected. However, the core stayed the same at 5%, and this is probably the most important number out of the two, because it shows that inflation on the ground isn't ready for turning. You may have noted we've been speaking about the US inflation, how that was falling for 4 months on the trot. But over that same period, the core actually rose for a couple of those months and only turned last month, or may have turned last month. So the core always tends to lag the headline number. But if the headline drops long enough, the core is likely to turn around as well. But we need to keep an eye on that. Not ready to see an ECB pivot just yet on those numbers. Right, that's all the data out of the way. Let's get into some of the headlines. COVID China, they reported 36, just under 37,000 new local cases. That was down a bit on the day before. Still further protests kicking off over there regarding COVID measures. But Beijing did come out, or one of the wires reported that Beijing were going to allow COVID testing to be relaxed somewhat. I haven't written down the number. Let me go and right. So they're going to allow some residents to skip mass COVID tests. So that falls into the easing of restrictions, if you like, over there. We've seen dollar yuan coming off significantly. We'll look at that in a moment. They're also playing fun and games, playing with their toys with Russia, because some China and Russia warplanes temporarily entered the South Korean air defense zone, according to Yonhap. They are taking part in military drills over there, China and Russia, all part of the fun and games against the US, doing drills with South Korea, and this one doing drills with that one. So all the boys playing with their toys over in that area of the world. In Hong Kong, the HKMA said they have no plan or need to change the dollar peg system. As we know, we've had people trying to play the other side and a peg break, but that's them reinforcing their stance there on the peg. S&B's Schlegel, if I pronounce that right, said that the S&B is going to do everything to ensure price stability. We are heading towards an S&B hike. Their next meeting is December. They have quarterly meetings. That's coming up in December. Likely to be a a big hike as well, maybe 75 pips on the cards. ECB's de Costa says Spain's core inflation is likely to start easing in spring. Spain is one of the countries that has seen probably inflation coming off the fastest at the moment, and so that's set to continue later or into the new year. Now the ECB, a touted headline saying the ECB are going to halt reinvestments of PEPP and APP into the new year due to lower than expected market liquidity. This is not shock news, by the way, or anything of note. They did the same with QE when they were purchasing all their stuff. Just into the end of the year, that date between sort of the 20th of December and the new year, liquidity drops off a cliff. They halted QE, as I say, the last few years whenever they were doing it around that period. They're doing the same with reinvestments, just not to put any stresses on a low liquidity market. Over to the Bank of England. Bailey was in front of his bosses in the Treasury Select Committee. Nothing really of note. He was saying that the scale of total QT that will be needed is still uncertain. Still sees substantial upside risk to the inflation outlook. The gilt market is not back to normal. However, the risk premium in UK markets has pretty much gone away. That was as much as I saw of interest from him. Bank of England's man said inflation expectations are drifting towards 4% in firms, and that it's becoming increasingly embedded in UK firms. Obviously, inflation expectations are a big deal for a central bank. If inflation expectations, be it firms or consumers, are moving higher, they adjust their pricing accordingly, adjust their future moves accordingly, and that can act as a bit of a tailwind for inflation. So it becomes a bit of a death spiral, which firms increase because they expect inflation higher, then you get higher inflation. So that's what she's looking at. Said that the FX rate is an important ingredient for UK inflation, and that once inflation expectations have been managed, the bank rate can come off a future peak, but no numbers there on the peak. BOE's Peel said inflation is expected to fall rapidly in the second half of 2023, but that wage growth is not consistent with a 2% inflation goal. That's quite correct. There are high pay increases being handed out willy-nilly in terms of different areas and sectors going on strike, demanding higher pay numbers. Most of the wage agreements that are coming in are of at least 5%, maybe more, sometimes up near the 7-8% mark. Not as high as the inflation numbers, but they're coming in quite high, and that's going to keep inflation in the pipe for the UK. On his base case, it does not involve rates reaching 5.25%. So he doesn't expect rates to be going that high. We shall see. A couple of other bits before I bring in the other two lads. Adobe do some measuring of the sales, and for the US Cyber Monday sales, they said consumers spent 11.3 billion on Cyber Monday, and that was up 5.8% year on year. Now, a few people might make the note that obviously take inflation into account. Is it adjusted for inflation? Sales might be negative, so on and so forth. On one sense, it doesn't matter. There were sales, people were buying, whether they were buying less because the value was higher or the price was higher is irrelevant. I think at the moment, the fact that they are still spending is a positive for the US economy. Right, over to oil, nearly done. Iraq said OPEC Plus is planning to cut oil output by 2 million barrels per day this month. There's other headlines saying they're not going to do anything. So we're into that usual zone where there's going to be 100 different headlines all saying different things. However, they did say they are planning to boost oil exports by 250 barrels per day in the second half of 2023. That's it from the headlines front, apart from the CAD stuff, which I'll mention quickly. As I said, the Canadian data was very strong yesterday, and you wouldn't know it given how dollar CAD moved, or how the CAD moved, with CAD getting sold off. Now, apparently there was headlines out that HSBC is going to sell their Canadian business to RBC for some US $10 billion. Bit of a strange one, why dollar CAD would move higher. I would think more so pound CAD would have gone, because if you're talking M&A action, you usually take it from the countries of the two different banks, and HSB being mainly based UK, that would be the one to go on. It did move higher as well, so maybe there was some drag, as we can see there. We did get a move higher there as well, but none of the other pound pairs went with it, and usually there's some feed through. What do you make of that, Kay or Stel? Either.
No, okay. For me, I think, yeah, it's possible that it was an M&A related thing, because one of the banks actually commented on it. Now, where HSBC wants to put their money, I don't really know, because they've been slipping and sliding gradually more over to the east. So did they repatriate a part in, I don't know, even CNH or whatever? But
if they did anything at all, if they did anything at all, it's usually front runners.
If they did anything at all, yeah. But it was a bit of a strange move, so there may have been something cooking. And but you know, they could do the Canada leg one day, and then the sterling or dollar, or no, maybe not dollar, but they can do the sterling leg the other day. Today, the cable fixings are all big this morning. Is that a part of it? It probably month end, but we can only guess. But since a couple of banks have noticed this M&A thing, we may assume that some of it was part of it. Now, where they put their money, I don't really know, to be honest.
Yeah, we can't really know. One thing is for sure, though, it's not the one-off thing there. You know, I know we're only a small country, but they've left Greece as well, HSBC. So they're unwinding a lot of their businesses, I think, and consolidating, which kind of makes sense.
Yeah, there's been a bit of pressure on them. Obviously, they're Hong Kong originated, and there's been some pressure on them over there as well, because of obviously the tight links to China and that sort of stuff.
Yeah, well, they were Hong Kong. They are Hong Kong originated, but they are a UK entity, HSBC. Yeah. But anyway, yeah. To answer your question, I really don't know. We know it's very difficult to know what's driving that. But
it's also difficult to know how they proceed with the sale. So okay, we can assume some of it may have gone through, but I recall when my ex-employer bought an American bank, they actually never bought any dollars, but they just did swaps and repaid their dollar debt by buying the bank just as the local bank made money, and gradually they repaid it. Sometimes the M&A it's really tough to judge, depending on the structure of the deals, what is to be done. But since it was out yesterday, and since a couple of banks mentioned it, I trust some of it must have been related.
Yeah, and for those that may not know, okay, what happens is that when you get these big deals announced, and if they're of different currency jurisdictions, if you like, in this case, Canada company buying from a UK company, what happens is the market instantly trades it and tries to front run anything that's going on. It's very doubtful that when they announce this news, they haven't either done their business already, because you don't tell the market what you're going to be doing, otherwise you'll get punished for it. And secondly, these deals can in reality be structured in so many different ways, you know, payments over certain periods, you name it, shares, options, wherever you want to go about it. It's not just a straightforward we're announcing a 10 billion deal and now we've got 10 billion of FX to do. So the market does do a bit of front running on those things, M&A stuff like that. So anyway, let's have a look at dollar CAD, because it was even going against oil yesterday, and there's been a bit of a pullback today as expected, but it's not given up all the gains entirely. On the longer term, have a quick look out. We did push up, spike up above that 50 fib, but not long after we found it as resistance. So this is probably one of these times where that move is not a fundamental driven move, or it's pushed the market out too far, and so I'm going to consider that level still a valid level at 136. As I say, you can see there by the candles after we've held it since as resistance just below there, you can see. So the level becomes valid for me again, in my opinion. We have had this break up though over 135, so that's the area to keep an eye on. If we pull back, if we go right back in the box, or are we going to hold it and then maybe look to build back again towards 136? That's what I'll be looking at for dollar CAD anyway. And as we can see from oil, US oil still climbing, so maybe a bit of influence now just starting to come into the CAD side of things. Can that push on higher? As mentioned, there's a lot of this OPEC plus stuff floating around. Iraq saying they're going to cut production, others saying there's going to be no change. Oil's going to jump around the revolving door, as is usual around these meetings and things like that. Looking at some of the other pairs, been a lot of chunky moves going on. One of our favourites, Euromex. And by the way, I have asked if potentially we can make a request to ACAP to see if they can get that included, or whether they've got it in there at all. Not sure what will come of that, but we have asked, because I know some of you were looking, asking if it was available via ACAP, if you're doing the traders funding program, of course. So we'll ask the question and see what happens. But we don't have any control over the prices they provide and where they get their liquidity from. But anyway, Euromex, I managed to have a little dip on the downside yesterday. Bought it down in the 1970s, rode it up to the 1990s, then unfortunately got tripped on my trailer overnight. I moved it from 1979 to 1982. If I'd have left it, I would have still been in, but I didn't, and I got done on the spread on that one, so I'm waving the ship goodbye for the moment. Got a bit of a traffic area here up to 20s, and if we break through that, then potentially we can have another look at these highs and see if we hold them again. I think for me, just about playing the range from now. We've had a little bit of a pressure release on the top. We've had a bit of a pressure relief on the bottom. I'm going to see whether we go back in the box for the foreseeable. What are your thoughts on this one, Kay?
Yeah, as I said yesterday, and it appears that was the case. This Euromex got an absolute slap in the European morning. And to me, that's European. And I thought then the possibility was for Europe that it were European asset managers having to do their end of month rebalancing. And that seemed to have been the case, because as the clock struck noon in Europe, the whole move in Dollar-Mix and Euromex came to a halt, and we spent the New York day recovering, well, virtually the whole move. So I reckon that was it. So we might have put in a low just for now and start to range trade it a little bit more. But as I also said, I think Powell could have a say on this. If he remains rather on, it's a tough call, because if he remains on if he goes a little bit more dovish, people will buy risk, and perhaps Euromex could come off again, because it's because of the risk correlation. But I'd rather say that if he stays hawkish, perhaps we find the top somewhere in Euromex, not too far, and we can retest the lows, because the as I've been saying many times, people like to trade the Americas as a bit of a block versus the rest of the world right now. So it's a bit of an open question right now. But at least I think the move has been undone. We can also see Dolomex coming back to this 1930 zone from where the move started, really. So yeah, here I think more rangy, but what we can say is that anywhere towards that those high 2020s up to 2040, it's still going to be a resistance in the Euromex, and I'd say around 1940 to 1960 on the Dolomex right now. We can't forget it's a 10% it's a 10% interest rate currency, which is the immediate neighbor of the US. So whatever happens in the States is going to have an effect on the Mexico. And I'd say a little bit like the stocky, but with different interest rates. The Mex can become an accelerated dollar versus the rest of the currencies.
Yeah, indeed. And obviously it's last day of the month as well. So any last minute bits and pieces to go through, we need to keep an eye on around the fixed times, top of the hours, and particularly the London fix to see if there's any last minute business to be done there. I think dollar mex, if we get any big move in the fix lower down towards those prior lows 19s, might be worth a look.
Yeah.
Running into PAL, even Euromex if it gets down there again.
Yeah.
We shall see lots to happen, no doubt.
Yeah, if you're still on the Dolomex, right? Just try to go to a wider time frame and go back to 2020. These low 19s. If you go on the daily, there's this level in the low 19s. I think it's around 1915, 19. It's March also 2020. So you have to widen the picture a bit to figure out the day where it was exactly this. You can see this little spike lower. I think it's March 2020. Just go on. You have a little spike lower.
Yeah.
There. And that's what I was looking at yesterday to see if we would close above or below, and we closed above. So I'd like to keep this one in mind. It's around 14.15. So I think that's a nice one to keep in mind, because that was the real springboard for the pandemic panic.
Yeah, cool, mate. Cool. Okay, dollar CNH. I've been stopped out this morning on my trailer at 7.14 and my longs from down at 7.06, 7.04, and a bit of an ad the other day at 7.18. As mentioned, there's been a bit of a move again in China, maybe on this easing stuff, but we've seen it coming right off. Now it's gone through 7.09, which is a bit of a line in the sand for this action up here, sort of 7.10, 7.12. So we're carving through the levels. We could, at this rate, get a move back down towards these levels, and there's been a bit of a support, decent support here around the 7.02s, just a bit under. Probably protection of that big 7 level. So anywhere down here, again, I might be looking at that to re-enter longs in there. Although I will be a bit concerned the speed at which we've come back down here, and obviously the power risk as well. So if I do anything, depending on how and when we get down there, I'll be traveling quite light. I won't be going too heavy into any trades there. But yeah, I'll be looking at longs down there in that one. How about you, Kay?
I'm going to watch it a little bit as I've updated everything. I was a bit more dynamic yesterday as well, and this morning waking up, I didn't like dollar China to trade below the PBOC fixing again, and it stayed there. So I let everything go this morning as well, and just watching the boat. There's a lot of data coming out out of the US as well for the rest of the week. So I think I may just let the data go by, and then afterwards see where China is at with their possible reopening plans or so, and from then see what happens. base idea is still to buy 7 and down to 696 or so with a stop sub 694. That's kind of the plan. That was the original plan. I don't think China will reopen tomorrow, so it might still be a valid plan. But I guess the dollar will have a say in this as well going forward this week.
Yeah, definitely, mate. Definitely. I just want to bring Stelwy on gold, just to have a look at that, because we're going a bit sideways at the moment. No real direction for this one. What are you making of this one at the moment, Stel? We just waiting for some sort of input to send us one way or another.
Tonight. We're consolidating sideways. We've said it for a while. The levels are pretty clear. So 1725 to 1730 is the first support. Then obviously 1680 to 1690. And the resistance is 1786, those highs. So, gold and silver have done well today and, the past few days overall because of the market's anticipation of a peak in rates and a kind of dovishness from the Fed. I think still the risk is for a disappointment, so that's why you don't see me going all in. I don't want to trade this on the short side unless we're close to a breakdown level. So I am personally waiting for tonight and for payrolls. And as I've said before, when the breakout comes, and if that breakout is coupled with a change of rhetoric from Jay Powell, then I will buy wherever the market is, even if it's up 2, 3, 4% on the day. I don't care. But at the moment, I am just standing by, observing. Same with a lot of other things like the dollar. There's a few dollar pairs which are at very interesting levels, like the dollar MEX. And I tell you what, the dollar MEX did break down from the previous lows, which was 1934, if I recall correctly. But now it's kind of hovering. And I tell you what, if Powell does disappoint, this is going to shoot higher. This is one of the pairs that I want to be long of if Powell does disappoint.
Yeah. And we should clarify what you mean by disappoint. You mean disappoint the doves and be hawkish?
Yes, be hawkish, basically, yeah. And remember, I've said this so many times, this Fed members have been hawkish. What's his name? Bullard again yesterday repeated that they will need to do more hikes to restrict growth and return to kind of neutral monetary policy in 2023. And he's always telling us that the market's underestimating what level we need to get to. So we have to be aware of that. Having said all that, of course, central bankers, they can change their tune from one day to the next. We've seen it so many times. But at the moment, everybody's pretty hawkish, except Brainerd. And I think the risk is still that Powell is not as dovish as the market expects today, and risk gets sold, dollar gets bid, etc., etc.
Yeah, and I'm well on board with that as well. Speaking about it in the room, that Powell's only job at the moment is to reinforce that they are hiking, whether they're going to slow hikes or not. They're going to get rates hiked up to a ceiling, and they're going to keep them there. And that right now is his only job. It will be, for me, a complete shock if he goes against that at all. If he mentions it at all, we've got the prospect that he may say not a lot on monetary policy tonight, and then everyone's going to be really disappointed, and that will probably be for the doves to take dollar and yields a bit lower if he doesn't talk about it. There's a lot going into this meeting or this appearance, and we should always factor in that we may be disappointed by getting nothing at all on monetary policy. On the rates front, just having a quick look, we are pricing a 50 pip hike at 83% probability, a 75 pip hike at the balance 17%. So the market is leaning towards a 50. So obviously anything hawkish from Powell to say that we might get another 75 is obviously going to flip those around, and we'll see dollar reacting as well as yields. Still, Kay, do you look at bunds at all, or bounds as Blake calls them?
Yeah, I do look at bunds.
There's a question in the Q&A
Yeah,
still about any thoughts on bunds, and I'll take the one on the Aussie Kiwi afterwards.
yeah. And have you got any charts up on the bounds, as Blake calls them?
Who, me?
Yeah.
For me, it's a tough one now. I've been bearish. If you look at for those who are members, if you look at my macro bias on bunds and treasuries, for that matter, when we broke down from actually, let me take the screen for a second, just to show that. Yeah. Hold on. Let me go. Not video. No, you don't want to see my face. You want to see my charts. There you go. So, pretty. Where do I get that? There you go. Yeah. So we have. When we broke down from these lows here and we retested, then we had that candle here, which was incredibly bearish. I switched to bearish and I said, look, I'm bearish bunds and treasuries and everything. And we've had a big old move. It's been a year and a bit. And once we bounce back from here, was it 2 weeks ago, 3 weeks ago, I switched to neutral in both bunds and treasuries, because I think that, yes, we might get disappointed by Powell, like I say, but I think that yields, they do have a chance of hitting another high, but I think it's greatly reduced now. So the risk reward is not as clear as it was. So what do I do here? If you ask me to trade these, I will probably trade them on the short side, simply because I think today's risk from Powell is to be bearish risk, bearish bonds, bearish everything. If it wasn't for Powell, I would have really no major direction, and I still don't. So I have a neutral bias in kind of the medium term. But if for today as a risk reward, I think being short is probably the right way around. And I don't want to say the right way around. I think the chances are better. I think your odds are better if you are short rather than being long. And if you are short, I think the market's going to be, if the market gets disappointed by Powell, the move is going to be much more pronounced than if Powell comes out neutral or mildly dovish like the market expects. So that's what I think in the short term versus the medium term, where I have absolutely no bias at all for either bunds or treasuries. And it's a similar thing with treasuries. If it's quite similar. The okay, we've actually it's not the same as bunds, because there was a low here that we actually hit the same level with bunds, so that it's a much stronger support level. But I think with treasuries, after this huge move lower, as a risk reward, I don't see as a medium term trade, I don't see a big potential being short from here. But as I said before, for a daily trade, for Powell, I think short is the right way to be.
Yep, cool. Thanks, mate. Quick question there from Bhavana, if I get your name right. So SPX has not discounted hawkish. I'd say it's probably we've probably seen a bit of a pause, and it's going to react one way or another in SPOO. So, this, for me, it's got the ability here. If Powell's dovish, then we're probably going to be well through 40, maybe heading up to 42s, that sort of area. But I think what you've got to look at is the long-term picture. Okay, the Fed are likely to get rates up to maybe 5%, maybe a bit higher. We'll know that from when we see the dots. But are they really going to go higher than that? I think what we're going to get to is if they start turning more hawkish than even the 5% level, you've got to start questioning, are they really going to get that high? They can get to 5%, no problem. I don't doubt that. Can they really push it higher when we're seeing the economic data turning, when we're seeing softness coming in? If jobs roll at some point, that's probably the last checkbox to seeing jobs go negative or start to soften, the labour market start to soften. So then you've got to think, well, 5% really is the ceiling. So what are stocks going to do? Powell can be hawkish today. Stocks are going to come off, maybe down to 38, maybe more. But then you've got to think to yourself, okay, well, now we're heading towards a potential recession. The data's weakening. They're going to be at an end of hikes, whether it's March, Feb, whatever they get to. And then the market there's no more hawkishness to price in or to trade. You've got to think that stocks are probably going to bounce because the doves who are going to be plotting when they're going to cut, and they're doing it now, are going to get stronger and stronger and stronger. Personally, I don't agree that stocks should rise when a country's heading into a recession, but that's the market we're trading at the moment. So if you're looking for an end of Fed hikes, if you're looking to get on Dovish side, this might be a good chance, if Powell is hawkish, to get yourself some good levels in stocks if they're going to rise, because the economy is going to weaken and the Fed are going to be forced to cut rates sooner than they're telling us. So that's how I place stocks. I'm doing the same in the dollar. I want a decent rally. I want a very hawkish Powell tonight. Give me dollar yen up in the 140s, 142s. I'm going to start scaling in shorts again for the longer term. I'm already been positioned long Aussie dollar against the US dollar, playing my bearish dollar bias, and I want to get in dollar yen as well because of everything going on in there in terms of Japan and inflation and whatnot. So that's my thoughts anyway for Powell. I think if he's going to do it, he's going to be hawkish and reiterate the Fed's path. How much that gives us in a rally in the dollar, yields, whatever, remains to be seen. But we shall trade it as we do tonight. Kate, do you want to have a little look around, mate?
Yeah,
Check
sure.
out,
Let me share screen. And I'll first of all, I'll take the Aussie Kiwi question. Can you stop sharing?
Yeah, hang on.
Or shall I just take it?
No, go, mate. There you go.
Okay, thank you. Here, so first chart of the day, since we're on the World Cup, is that Ronaldo, it didn't take long, who left Manchester United, is about to sign a bumper contract with the Saudi football team. I thought it was worth a little mention, since the World Cup is still ongoing. I don't expect you guys.
Wow, Saudi team, really? So he's basically taking the money.
Exactly.
Why not?
Yeah.
Why not? He's at the end of his career, right?
In the States, there's not enough money going around, mate. It's Arabia now. Let's do something more serious. Where is it? Here. Aussie Kiwi.
We're looking at cruises as well, have you? Looking at the adverts on that page?
Yeah. Yeah, and strange adverts we're getting when we are visiting pages, right? Aussie Kiwi. So what we've seen really, and the question is exactly the right one, is likely just moved down from here with the divergence between RBNZ and RBA. Charlie, I think let me just kill my squawk for a minute. Charlie, I think we've seen likely the bulk of the move in the divergence between RBNZ and the RBA for now. We've been trading it for over a month, right? I've been saying it on the chat that I liked to trade it for a while. So we had this big move. I was in at times, and once we went around, where was it? I think it's around. Yeah, it was a bit short, and then around here somewhere, I started to cover it. I think we're getting into interesting levels here that we should be respecting. But so this trend line here, it tried a couple of times, it broke, retried, and then we did this last leg higher, and we are back onto that level. So I'd be respecting it here in the mid 107s. We got a few retracements and FIBs hanging around here as well, down to the low 107, and then we have this trend line that was broken, which comes in around 106.75. Can it go there? Yes, it can go there. Are the RBA and the RBNZ still divergent? In a certain way, yes, because as de facto the RBNZ raised more than the RBA. Is it still a trade? That will now really depend on things going forward. And don't forget that Aussie, for instance, being a more direct partner of China, if China decides to reopen, Aussie could benefit from it compared to the Kiwi, probably. So we might see these things start to reverse a little bit. I wouldn't really go long before we. I know some people are trying to fish the bottom in this in our community as well. It's a decent level that people can probably bank on here, since we have been close and we don't go lower. So it's a reasonable level to trade against, but there is a possibility we get down here first. But I'd say to trade the divergence, you can only trade it for as long as really it goes. And those correlations, sooner or later, the positions are big enough in one side, and then positioning becomes an issue. And as I said, if China starts to reopen, Aussie can really benefit from it, and this one could actually start to reverse a bit. Now, to really reverse, we have to go above 108 and a half, and I think the big level here, 108.80, 85, where we stopped the first time, rebounded, and then broke below. This is going to be the signal. If it goes back above here, then this thing is going to go back higher, in my opinion. For the time being, personally, I'm neutral. The diversion is still there, but how long can we trade it, right? So there's still a real differential in interests between the Kiwi and the Aussie. If you look at the longer end, there's a good 0.5% difference in between both, and the short end are probably reflecting the same thing. While we're on rates, by the way, we are stabilizing here, and Powell has the power. Powell's power to put this one a bit higher again, but to me we're in ranges. Recall, I don't recall whether it was on F.A.C.E or because Steve was talking about this zone as well. Keep a very close eye on what's happening. If ever Powell would turn dovish, this 355, 360 is going to be a mega important zone, in my opinion. So keep an eye on the US 10s. And as we know, the dollar yen is going to be the one that is going to be mostly reflecting what's happening on the US 10s. It's been a near perfect correlation in the past months. By the way, decoupling from stocks, the dollar yen, and then I've been talking about it for months on our in our F.A.C.E. ForexAnalytix community, that the correlation can come back, but you shouldn't trade dollar yen on the back of equities. Just trade it on the back of interest rates right now, until we see something really dramatic or spectacular in the positive way happening to economies. Then this correlation could come back after a while. But for the time being, trade those yields. So 355, 360 on the downside. Top side, we're starting to look at this 385, 390. So watch what's happening, not only on Powell, and I'm going to voluntarily play a little bit the devil's advocate here. I think the biggest surprise today, in my opinion, would be a dovish Powell. He can disappoint people who are expecting the pivot, because there's a lot of pivot callers, but I think deep down in the people's minds, and especially when I read strategists and economists and stuff, they don't really expect the Powell to turn yet. So to me, the biggest impact tonight would be that if he in fact turns dovish, and then the dollar is really going to get hammered, in my opinion. But anyway, it's not my base case. I think he's just going to walk his well-trodden path, telling people that, like the rest of the Fed members, as Dale rightly said, apart from Brainard, who is more neutral now, the rest saying we are going to end up higher than what people think, but that's going to be more reflected in the 2s than in the 10s. The 10s are more going to reflect what's going to happen in the economy post this week's data. I think this week, the second part of the week is really packed with data, and for medium-term investors or medium-term traders, if you really don't have to trade anything today, it might be wise to just wait for the US labor report, and you will have a reading of all the data that come out this week, and then make a judgment for a more medium-term positioning. Because I think if you take into account everything that's going to happen this week, it may be already decisive for what's going to happen on the next FOMC. Take away what's going to happen on the CPI late early December, but it's just my view, of course. But I think towards the end of the week we'll know quite a bit. So this for the yields. Month end and whatever shenanigans. There is why is my chart showing such bizarre stuff? Here we go. So month end, there's a bit of rumors going around that if we look at what the performance of the Nikkei over this month, well, actually it's not that brilliant, but there's a bit of rumors going around that people may need to sell a bit of yen. That's just a couple of the models showing this. Dollar yen is a bit better beat, so are we going to get a move up into the 139.60s ahead of Powell, where we stopped last time? It's possible, but I'd really observe a range here. Wait what the Powell power is going to say tonight, and trade the data really. If we start to get back above 139.60, we can get a move back into the high 141s, and then have a look perhaps at what happens again at 142. That is if the data continue to be better, and I think especially the labor report. The zone that Ryan is watching here, this is going to be an interesting one if we ever get there. In turn, if we start to break below this 137.5, there's another two big figures really in there. And then if you look at the daily, then we should start to look at what happens around the 200 DMA as well, which is around 134, which hasn't been visited for ages. Last time we visited the 200 DMA was February 2021, so that's a year and a half ago. So it's going to be quite an important zone here, a big figure, big figure here, if ever we get down there. On the rest, on the day, we've seen cable bid through all the morning fixings. It's a bit of a short-term trend line having been broken, but a lot of it is fixing stuff, right? So keep an eye on what's happening later on in the day. 120.5 up to the 120.80 zone. That's where things could play. If we get back below 119.80, it's a possibility to get back at 119.40. I'm not sure if we need to expect a lot in this, but again, fixings can take it a bit anywhere. If we get below for the fixings or whatever, perhaps a look back into the 119, the figure. But to me, I'm kind of a little tiny, it's really tiny bit, because I think this afternoon, despite what people say, we may see a little better or a little worse sterling based on what the FTSE has been doing this month. But I'm not expecting like big drops in anything, rather range. And really, for what I spoke about the Aussie Kiwi, anything else? Anything else? Yeah, the mix. Ryan already spoke about the mix. The thing what yesterday also spurred me to take profits is that we came back into this Euromix channel for a short while and then really started to rebound, and everything happened here around the noon European fixings, right? And then we started to rebound. So as long as we are above this channel, Euromix is room to consolidate, in my opinion, in this zone. And really, apart from this dollar China, as people know, I was trading off this and of this level, and this morning with the dollar China still trading below the PBOC fixings and unable to regain the 715. Really, I just decided to call it a day for now and wait for what's going to happen. So that's what I was showing as well. This whole zone since we started, it's 696 up to 70102. This to me is where it's playing ball or not. If we revisit in dollar CNH, this is going to be a very, very, very important zone in my opinion. If this starts to break, the whole game may be just over. And with that, Ryan, I'll pass it back to you.
Thank you very much, mate. Let me grab the screen back. Right, quick question here from Alan in the Q&A saying, if pound is dovish or no mention of monetary policy, which is a good asset to sell the dollar? The dollar, unless you're looking for something outside of the dollar. I think it's you can pick your poison in what asset to sell dollar-wise.
What's going to move more? Dollar Mex is probably a good one. You get the carry as well.
Cable out of the major.
If he's dovish, yeah.
Bang for the buck.
Dovish,
yeah, cable will give you a bit more bang for the buck. If you're looking at something like euro dollar, if that shoots high, then you need to keep an eye on the 115. I've don't know why. But 105. I keep saying 115. I don't know why. I've missed each one of these moves. 105, and it's a big old level. I've really had my eye off the ball with that one. Let's see, show it here. Yeah, the 105, big level, and it's hit that pretty much twice and pulled back. So given where we are now in the 103s, 103 and a halves, 105 could be a level to watch, at least on the other side to fade a move. But yeah, really, dollar Mex is going to be a big one. You've got to look at it in volatility terms. Otherwise, you're looking at gold, things like that
Silver.
to move.
Silver,
yeah, go on, mate.
If China really is serious about reopening a little bit, and I think that's what is taking the metals also a bit higher today. If silver starts to break this 22 figure 15 stuff, it can really go up.
Yeah. So that's that one, Alan. Well, I just wanted to point out that we're talking about the data this week, and it is very important. The number today is going to be the non-farm ADP non-farm numbers employment report. 200k expected. This ADP can be a bit flaky, as we know, but the market is going to move on this if it's a big variation. If it comes in at 200,000 or a decent plus, anywhere over 100k, then the market's going to say, well, that's the Fed hiking higher and longer. If we get a negative number at all, that's really going to spook the market, and we'll see how close Powell's paying attention to that if he comments on it later on today. Don't worry about the GDP stuff. It is a revision, so keep half an eye on it, but I think the jobs is going to be more important than that, at least for today. And you've got to look at things in two aspects. What does the ADP a move there mean for today's pricing, and what does it mean for the longer term? We're always going to get a flash reaction, but if it comes in at 100k and the market sells dollars, you've got to ask the question, well, does that change the Fed's mind? 100k jobs report. For me, the answer is no. So then potentially you need to look at a stretch point if the dollar's getting sold. Pick your levels, and maybe that's a fade to look at that getting in onto PAL. Right, aside from that, I just did want to point you in the direction of our traders funding program. In case you haven't seen it, I popped a link there in the chat room as well. Do check it out. We're having a lot of people getting onto a live account and taking money out of it, which is all we want to see. We want to see people making it work, taking profits, and people are doing just that. We do offer the support where it's needed. We're not just getting you into a program and letting you go on your own. You get free access to the ForexAnalytix chat room, all us guys in there. There's even a dedicated room as well if you have any specific questions. So you can get the support to get you through the program. You can come and speak to us all day long. You get a free pass for that depending on what account you take up. But yeah, check it out. It really is quite a success, and it's good to see people making money, learning the discipline from this program, and taking some green home as well. So good, well done to all you who are doing that. And on that note, I will say thank you very much. Thanks to Kay, thanks to Stel. Keep an eye on the data today. Trade safe. If in doubt, stay out. Have a great day. We shall see you tomorrow.
Good day,
Cheers,
everybody.
guys. Cheers, everybody.